Welcome back to Paramedic Financial. This is Jonathan Tran with Finance in 5 to 10 minutes. Today we're still talking about the hot topic of tax. So exciting, right? But a lot of people may say, hey, it's great that what's new in 2020, why should I pay taxes? What are the deadlines? But the key thing people want to know is, how do I pay less taxes legally? So there's many ways that we can go about that, but the main thing is how do you find, one is deductions, and two is how do you find credits, right? And so there's many different deductions and credits out there. I mean, we could spend a while on it, but what I'll do is I'll just kind of summarize some of the key ones that apply to the majority of people. And then of course, your situation, each person's situation is different, right? So when you talk to your tax consultant or whoever is helping you with your taxes, you can ask them, hey, this is my situation, this is my job, this is my occupation, this is my household situation. What kind of deductions and credits can I qualify for? And then they can advise you on what you need to put together so that you can bring it to them and you can claim those deductions and get those credits, right? So the first things first is how do I get some more deductions? So the first way is utilizing a retirement account, right? I spoke a little bit briefly on that in the last video. Is any type of retirement account that you put money in today, such as an IRA or a 401k, or if you work for the government or the school system, a 403b, any money that you put in there is called deferred income, right? So if you put the money in there, you get to deduct your income today. So say, for example, your income is $80,000, you put in $19,500, which is the max for your 401k, so you drop your income about $20,000. So now you're paying taxes on $60,000 rather than $80,000, right? And so this is a great way where you're just moving money from one pocket to the other, and you'll be able to get the tax deduction today. Later in life, when you retire and you withdraw that money, then you pay the taxes later, right? Why would you want to do that? Is you want to lower your taxes today, but also all the interest earned during that time from when you put that money in there all the way when you retire, that's all deferred as well, right? So you don't have to pay the interest today. A second way for you to get some more deductions, if you are a self-employed person, right? Keep track of all your expenses that you do for your business, right? Try to use an app like a QuickBooks app or something on the phone to keep track of all your expenses. Take a picture of your receipts, anything related to your business expense, such as cell phone, your clothes, the mileage you drive in your car, expenses related to, a computer or office expenses, whatever it may be, so that you can run your own self-employed business or your business. Keep track of all those expenses so that by the end of the year, when you go and file your taxes, you provide all those expenses to your tax person and they can deduct and lower your income down, hence paying you less taxes, right? Now, if you are self-employed and you're just filing your business under yourself, you have to realize that there's an extra tax you have to pay, is your self-employment tax. Everybody has to pay Medicare and Social Security tax, right? But when you're self-employed, because you don't have a company paying for the other half, you have to pay both sides, right? So you're paying a little over 15% in self-employment tax when you are receiving like a 1099 or you're self-employed. So some things you may consider is setting up a company, right? Like an LLC or whatnot. And then depending on how you structure your LLC, you'll be able to make sure that you pay yourself a reasonable salary for your job that you do for yourself, but then you'll have some tax advantages in lowering your taxes, right? So that you can expense more on your business. So if you have more questions about that, shoot me comments below or send me a message. Happy to talk one-on-one with you because everybody's situation is a little different. Other deductions that you can get are related to school, right? If you're a parent that's taking care of a child going to school, you can claim some extra deductions for your child going to school through the American Opportunity Credit you can get back, and also expenses that you expend for your child to go to school. Those are some things that you can deduct. If you already completed school and you have a loan that you're paying on and you're paying student loan interest, you can deduct a certain amount of that interest as well, right? So anything related to school, if you receive a form, bring it to your tax person, let them figure out how to claim those deductions and credits for yourself. If you are self-employed and you buy health insurance for yourself, you're able to deduct those health insurance premiums on your taxes as well. So keep track of all the medical costs that you incurred during the year, and also all the premiums you pay for your health insurance, and make sure that if you are self-employed, you receive a 1099, that you can deduct those premiums from your income as well. If you also are self-employed or you have a business but you don't quite have an office to deduct, but you work from home, you have a home office, you're able to claim deductions from your home office as well. You can't claim the entire house, but whatever you're using for the square footage of the space in your home, you can claim that as your deduction for using your home as a home-based business. HSA, Health Savings Account, I think I talked about that in my health video. Health Savings Account is another form of an account that you can deposit money into for health-related expenses. Now, why would you want to do that? Is that money that you put in an HSA, you don't have to pay the taxes on it and you get the tax deduction, right? And as long as you use it for qualified health expenses, then you never have to pay the taxes when you withdraw those funds for your medical expenses. Jury duty, we all have to serve at some point or another. So if you receive any jury duty pay, you can deduct it up to certain situations, right? So you receive that form, you let your tax person know that you served jury duty, you got paid for it, then they will know how to take care of that for you. Otherwise, I think here, oh, this is another one. QBI deduction, Qualified Business Income Deduction. So if you are self-employed or you have a business, the government allows you to take a deduction called a QBI, or Qualified Business Income Deduction, and it lets you deduct up to 20% of your income. So after all your expenses are calculated and before that money rolls up to your personal so that you can pay taxes on it, you can get up to 20% more deduction on your business income, right? So don't forget to take advantage of that. If you have a qualified business, talk to your tax person about that. They'll be able to determine if your business qualifies for that deduction, and you get another savings, right? Very, very powerful. If you have a home, you can deduct your mortgage interest, right? So you receive that form at the end of the year for your mortgage statement, and then whatever interest that you paid for your mortgage, you can deduct that. Credits you can receive, we talked about in the other video, the earned income credit. If you're at a certain income level and you take care of one or more children in your household, you can get at minimum, I believe it's about $400 to $500, up to $6,660 credit for taking care of a child. Also, if you have a child that's under 17 and you claim them, you can claim up to $2,000 per child. And if they're over 17, but they're still in your household, you can get $500 for claiming them. Another tax credit that applies to people is the premium tax credit. So if you buy the Affordable Care Act health insurance, marketplace insurance, aka Obamacare, if you have a certain income level depending on your family household, then the government will give you a premium tax credit to pay for your health insurance. Now sometimes, because you're estimating your income, you may think that you're going to get a certain amount of premium tax credit, but maybe you overestimated your income and you actually made less than what you claim, then actually you'll get more money back at the end of the year. But reverse back, if you claim a certain income for your health care and you underestimated your income and you made more money than what you claimed, then you may owe back money, right? So just keep that in mind. Basically, that's pretty much it, right? So those are some deductions and credits. Okay, deductions is just lowering your income. You don't get money for that. So just say your income is zero and you have extra $10,000 of deductions, you're not going to get $10,000 credit back, right? Now, but if you have a credit and it exceeds your income, then you get that money back to you. A credit is like a refund to you, money in your pocket, you can keep that. Deductions just lower your income down. So remember, know the difference between the two, right? And so I hope that information was valuable to you guys, because I know a lot of people always ask, like, how do I pay less taxes? I pay too much, or how do I get more money back, right? You either have to find deductions first, and then also you have to find credits. So comment below if you guys have any questions or you guys want to know more information about something. Also, make sure you subscribe to our link, and I look forward to seeing you guys again. Thanks a lot.